Hey everybody, it's Pete. Welcome to Stock Trading Pro. And today's Stock Market Live, we're going to break everything down. Today is the day. It's like Christmas Day for active traders, that's for sure. If you're involved in the stock market right now, the entire market, which was in an 8-day trading range, waiting for today at 8:30. So if you're watching this on a replay later, you're going to be the recipient of amazing volatility. The one thing that we could virtually have a lock on for today is volatility. Yesterday afternoon, bears stepped up and smacked stocks down after it looked like we were going to have a little bit of a rally. The first hour was kind of okay. If you're wondering how to profit during rising inflation, if the numbers come out to show that inflation has not slowed down, we're going to talk about that today. We're going to talk about the best stocks to buy now and going forward for 2022. If the stock market crashes, where there's some pockets of opportunity of the top stocks, we're also going to talk about a hedging strategy that is super easy, that I guarantee anybody can follow. It's super, super easy. I'm going to show you a book today that I think is kind of cool to have on the bookshelf, like I have everything in the background there. And I'm also, again, it's Friday. Every Thursday night, we have our boot camp coaching call. So I'm going to review some of the stuff that we talked about on last night's call, hopefully inspiring you to level up your trading to be ready. Now, one thing I want to talk about today, which is everybody's looking in one direction, expecting one thing, especially, again, if you're not familiar with what we're talking about, the way that the market imploded yesterday afternoon, and specifically the SPY, the way it actually broke down out of the daily trading range. So if you could visualize what we're talking about over here and this 8-day box, and we kind of could really see it pretty cleanly on the hourly chart, where we rallied up, we hung out, and everybody's just waiting for what we're talking about today, which is the CPI number. Now, let's be super clear. We need to be prepared. Forecasting, predicting, any of that language, get it out the window. Nobody's got a crystal ball. We need to be ready. And once we have our game plan for the day, I'm telling you right now, especially if you're a day trader right now, if you're day trading stocks, you better have like your coffee done, your water on the side, everything ready to go, because you shouldn't be leaving your seat today. That's the kind of market that we're going to have today. The stock market should be amazing. But let's talk about what happened yesterday and the granddaddy of surprises today, if it happens. So let's just set up the tone of what is expected to happen based on the way the stock market traded yesterday. We broke down, right? Some super heavy trading in the afternoon. This is what the market did at the end of the day, just absolutely collapsed. Now, before you say, oh my gosh, everything's going down, there's not going to be an opportunity to make money. Oh, hold on. If the inflation numbers come in where it shows that it peaked and it looks like it's coming down a little bit, I'm telling you right now, and I'm telling you this as somebody who can't wait to trade myself. If we show a decrease and the bulls step in at 8:30 this morning, we are going to have the mother of all trading openings, especially the first 2 hours of the day. It's going to be amazing. I think it's going to be amazing either way, but I think we can all agree that it's just a little bit easier when stocks find a bid, hold the bid, meaning buyers step in and it starts to go up. We got a lot to cover today. We're going to dive a little bit into Investors Business Daily today. They have a list of the 19 stocks you want to watch if inflation does become heavier than expected and stocks go down. We talk about sector rotation every day. There's always pockets of opportunity, and you can see how sectors rotated. And this is where, look at how different that is. Even just a couple of days ago, where most of it's green, red started to work its way heading into Thursday, and now heading into Friday. This is what we got yesterday. So if you can't tell, I'm super pumped for today, and I rarely do that because you want to be professional. Calm down. I can't wait to trade today. 8:30 is going to be amazing. It's going to be crazy to see how it unfolds into the market. I wish all of you could be in the boot camp with us or inside of our community, because it's going to be really, really fun to trade. We got a lot to cover, so stick around. I'll be back in just 1 minute. Maybe not 1 minute, maybe 5 seconds. I just wanted to make sure I got that up there. So anyway, my name is Pete Renzulli. Thanks so much for joining me on Stock Trading Pro. We do these stock market lives every Monday, Wednesday, and Friday. I just can't wait for the market to unfold today. But I want to show you this book first. A lot of people ask about what do I have on the shelf, anything that I would recommend, especially if you're a new investor in stocks. This book is actually pretty good. I can see the author's name here, Jason Kelly. It's got a ton of really good reviews on Amazon. And again, I would never suggest spending money on anything unless I thought it was worth it. It's worth having on my shelf. It breaks down several different investment strategies. It talks about stock market investing in a very well laid out process of how to look at stocks, why companies raise capital, all that kind of stuff. And then, like I said, it breaks down 5 different stock market investing strategies. Okay. All right. So anyway, let's get into sector rotation. Let's get into what we're looking at today. Let's get into the big story. But first, I want to talk about probably something that I think most of you are really focusing on right now is what do I do if the market goes down? That's the big thing. So we're going to do a quick dive into what the CPI report means, what that means for inflation. And again, it's pretty easy to understand. So if we kind of jump on over to that and what we're looking at. So what exactly are consumer prices, right? This is what we're talking about. We're talking about all of us, me and you, going to Costco, going to the supermarket, and everything you buy is through the roof right now. If you happen to be new to the stock market, or it just happens to be, maybe you're not new to the stock market, but you're just looking at stocks and don't understand consumer price index and inflation, essentially what we're looking at is how far does your dollar go now? So when you go to spend money and you're looking to buy lunch or you're looking to put gas in your car, how much does it actually cost you now compared to what it was a couple of months ago? And that's what inflation is, to put it in as simple terms as possible. So now how much extra money do you have to spend on other things versus things that you need, things that no matter what the economy is doing, you have to buy? Those things are called consumer staples. What else do you need to buy regardless of how high the price is? Energy. You have to buy gas to put it in your cars. We're coming out of winter, so we're almost in summer now. You don't have to worry about heating oil right now, but summer opening up, the 2-year, can I say pandemic? I don't even know on YouTube. That's kind of out of the way right now, or a lot of people are kind of getting back to normal. So we're going to start traveling more. So consumer staples, Band-Aids, and all of that kind of stuff that you need no matter what. Food, that kind of stuff you need no matter what. So if we start thinking as active traders or investors, what companies should hold their value or rally during consumer prices going higher? And more importantly, which companies should go down during rising inflation? And let's throw this into the mix as well. Next week is the Fed meeting. So we're going to throw the Fed meeting. So we have what's going on now, and then we have the Fed meeting next week where the interest rate conversation is going to come in. So what companies will be helped or hurt by the possibility of inflation? So what happens today, if you can tell I'm pumped, what happens today is also going to affect next week, because if you don't know, one of the, if not the primary way that the Fed, the Federal Open Market Committee, stems inflation or tries to get inflation in check for what they're calling a soft landing is interest rates. So they raise interest rates to cool inflation. But what companies get hurt by higher interest rates? Well, that would be growth stocks. And the majority of growth stocks right now are technically known as technology stocks. So now we have technology stocks possibly going down because of inflation. Again, tech stocks are things you'd like to have. We call those consumer cyclical stocks versus consumer staple stocks, stuff that you need no matter what. Food, energy, and those kind of things, right? So let's actually work our way over into those sectors. So if we start to break this down a little bit more, energy has been the number one sector, and you can see these are over the month. Let me actually make this a little bit bigger so you can see it and bring it up into the picture. So energy, stuff that you need no matter what. Healthcare, and then you can break healthcare down into a little bit more of a common sense kind of thing. Let's keep it common sense, right? What part of healthcare do you need no matter what? No matter how high things go, Band-Aids, all that Johnson & Johnson, those kind of things, right? A couple of companies in healthcare that reported good news this week on the pandemic actually sold off hard. So that also tells us the pandemic story is kind of out of the way. NVAX and Moderna. We could just take a quick look at those stocks right now, and we'll hop on over to the daily chart. Let's pop the 50-period moving average back on there. So NVAX actually had good news about their FDA approvals, and since that, it's actually pushing down. It's actually in a bearish breakdown right now. and Moderna actually not rallying as well. But if we go to the other side of the market and we start to take a look at energy stocks, and obviously we want to take a look at the energy ETF, you can see that it's been trending for the entire year. So, for somebody right now who's actually new to the markets, what I'm hopefully helping you out doing is when you read the headlines is say what companies will be affected by that, and can I make a reasonable trade that makes sense maybe over the next 2 to 3 months, that if inflation continues to go up, which companies will benefit from that? And again, just a common sense kind of thing, don't make it complicated, and which companies would probably get hurt. And that's mostly technology companies. So if we start to take a look at, the big dog right now, Apple, we also have Amazon. This is not the sign of a company that is looking to rally. And actually, Amazon if you see here at the end of December, early January, this is the high in Amazon, and that's where the market is. Amazon actually peaked prior to the market. The market actually made new highs, and Amazon was actually down there already. And we're actually getting a lot of conversations about the Amazon stock split and why the stock is not rallying. Well, if you go into any good software, but if we'll take a look at FinViz right now, and if we go down into the numbers and scroll down a little bit here on Amazon, and we go quarterly, and we go over to EPS, that's what Amazon did last quarter. So we're getting a bunch of questions about why Amazon is just not going straight to the moon after it split, which is what a lot of companies do. I think very similarly that a lot of the, let's take NEO, for example, those kind of stocks right now, they got affected in a very big way based on what's still going on with the work shortages in China. Now, are investors like us determining that although the numbers were bad for NEO as far as what happened from one quarter to the next, is that already priced into with that stock getting beat up? And what I'm trying to say here is, are they going to discount the fact that it's a 1 quarter, it only happened for 1 quarter, and now you can actually see we got a nice little bottoming pattern. So there's a lot of stuff to think about right now. Is Amazon trending down, which is why that's not as rocketing back higher? That remains to be seen. I want 1 more quarter before I start to get in there a little bit more aggressively. I'll day trade it back and forth, maybe even swing trade it. Has NEO bottomed out, and all the bad news that just got announced this quarter been already priced into the price action? And to give you an idea what I mean by that, which is all of this selling. And we know that there's other factors in there with the Chinese government. And obviously a lot of those stocks have actually been really, really rallying hard. And we could even take a look at Baba and Baidu. So you have 1 bad quarter, good deliveries, and the restrictions in China being loosened a little bit. So a whole different reason to be looking at some of those Chinese stocks. I personally have not been swing trading them because of all the background stuff going on with the government. But now let's kind of hang on. But I have been day trading them every day, but very aggressively, actually. They have great volume, great volatility. So energy stocks, right? Healthcare stocks. We're starting to see industrial stocks kind of hang on to the bid here. So what stocks are industrial stocks? What stocks will benefit from the market and the summertime coming up no matter what? Well, we can take a look at some of those kind of guys. What would FedEx increase over the last week or two? We can keep an eye on UPS. We've actually had some Caterpillar also having a pretty nice rally. So again, working our way through sector rotation. So now the big one that we want to keep an eye on over here is consumer defensive versus consumer cyclical. So you might hear them worded differently. Consumer defensive, also known as consumer staples. So again, if we could think about what kind of companies, if the number at 8:30 today shows inflation not slowing down and rallying, which companies should do good. And actually, we got a really nice article in Investors Business Daily today. So you want to screenshot this because it really breaks this down really, really well. So let's actually hop on over here. And actually, I'll post this link here for you. As soon as the call's done, I'll post this below. But you can see 19 stocks you'll issue own when a recession hits. So let's actually define what recession means, okay? Recession means, textbook definition, is 2 consecutive quarters of gross domestic product slowing down. So that's also on the table right now. to determine whether or not we are in the technical definition of a recession. Okay, so if we scroll all the way down, and they give a big breakdown, you can see the sectors as we're talking about them right here. We're just breaking them down in a little bit more detail over more time. Then they show this list all the way down here. Obviously, they're starting out with Walmart, right? Everybody needs to get discounted prices. So despite the fact that Walmart and Costco, so let's put this in context, Walmart and Costco recently got hit, but now we're talking about the rest of the year. We're looking to see, have these stocks bottomed out, and are they going to start moving in the other direction? Actually, Rex had asked, what's the book? So let's, right there. Okay, right there. All right, so we're going to get into Walmart and Costco. Now, are these stocks bullish right now? Okay, so let's talk about that. Are these stocks bullish? Costco is showing a little bit more relative strength. The earnings on Walmart was not awesome. So here's what we need to determine. If inflation starts today with the CPI number shows that it's not going to be good, I'm now going to be looking for signs of life that Walmart, Pepsi, Costco, Johnson & Johnson, Procter & Gamble, those kind of consumer staple stocks, consumer defensive stocks, start to show buying pressure from 1 week to the next. Now, you don't need to catch the bottom. It's one of the biggest things that is probably a very expensive mistake. Let the smart money, let the order flow show us that there's some bullish price action, and then we start to piggyback. So our job is to track, stack, and then piggyback on top of the smart money, and we look for optimal entries. So these stocks right now, again, let's go over to the picture over here and go down here. So top 500 stocks, and this is the big thing, during a recession, okay? So we're talking now about the top stocks to buy during high inflation, during a recession, and we're also going to talk about a strategy for short selling, betting on the way down in certain stocks. I'm going to give you a super simple strategy to tackle that as well. So you can see here some of the stocks you probably heard, but this is the most important part here. Look at what we're talking about. Consumer staples and healthcare dominating the list, okay? We have Walmart, we have Kroger, a lot of stuff that you've talked about, Pfizer, General Mills, Johnson & Johnson, Campbell's Soup, Kellogg's, and Pepsi and Colgate, right? None of these should be a shock to you, because if you think about in your household right now, and again, let's keep investing, trading. Let's make it as common sense. I don't want to say simple or easy. Let's make it common sense. What things do I need to buy no matter what? And what things can I kind of hold back on if I don't have extra money? That's how we should be thinking about the stock market from a simple perspective, whether it's investing, swing trading, or even day trading, but more on the investing and swing trading side of stocks. So this is the list that we're going to be populating. We're going to be watching this list over the next 3 to 6 months, obviously with a big number. So what you want to do is you want to take these stock symbols, you want to go over to your trading software, and you want to pop those into a list, and you want to say recession stocks. Now, does that mean these stocks are definitely going up? No, it doesn't. You still need to put that into the equation, which is actually going to, I'm going to show you that equation right now. And it's actually part of what we discussed on our coaching call last night, because remember, it's Thursday. I want to elevate. And what we talked about last night is a way of, once you have your list of stocks, let's say you got your stocks to buy going into the day, and then as the week is unfolding, how do you adapt both as the day is unfolding and as the week is unfolding to find different ideas? One of the, I'm not going to say it's a mistake, but one of the things that I think a lot of traders need to really understand and learn is that it's very, again, I'll keep using the same one that I always do, which is driving a car. You don't just get on the highway and say, I'm holding that steering wheel straight and I'm stepping on the gas and I'm doing 65. I don't care what else happens, right? That's not reality. That's not driving. So the market opens, you have your beautiful plan of ideas, right? So you have your beautiful plan of ideas going into the day. You have your stocks in play. You have the top stocks that meet your criteria, and the market opens. And then you're like, okay, now these are the ideas I want. But then you have, whether you're day trading, you have hour by hour. If you're swing trading, you have day by day, week by week, and month by month. How do you constantly, easily, in a structured manner that's simple to follow, How do you hit those ideas of the best stocks from different angles in different order flow? Now, one of the biggest questions we get right now in the current market is, well, the market's kind of choppy and sideways. And actually, I'll show you that because it was actually a big part of our coaching call last night. You can actually see last night's call was an hour and 45 minutes. And again, you could screenshot these, take a snapshot if you want. But again, this is what we're talking about right now, how to work your ideas. But I think the biggest part of the conversation is determining how to adjust your trades during different market conditions. Okay, that's probably the big thing right here. Okay, so as the market's unfolding right now, you need to determine if the big picture is less obvious, which again, we were in an 8-day trading range in the market. So the market itself was kind of jammed up. Then you got to go one level higher on the stock market power pyramid. So you have the NASDAQ, the S&P, and the Dow forming the base of that pyramid. One level above that, now we go to the sectors. So the broad sectors, we're now looking for relative strength or relative weakness in the bigger picture. Now, again, if you're not familiar with what we mean by sectors, what we're talking about in sectors is right here. Okay, that's what we're talking about in sectors. So once you break the sectors down, then you go a little bit deeper and you break those sectors down into sector stocks. This is the way to walk your way through finding the best ideas regardless of what the market is doing. So you're kind of now adapting, and I want to pull this up on a chart as well, because this is kind of fun. You're watching your ideas. Let me get this guy off the screen right now and get that off the screen. So what we're looking now is on the daily chart. So how long have buyers or sellers been in charge from one day to the next? Is it obvious 3 to 5 days in a row? Is it one day? That's one part of the equation. So you have your list of stocks. We just gave you those 18 stocks from Investors Business Daily. So in those stocks, is there one day of buying? Okay. And this is literally what you do to keep it simple. I want you to have a process so you're in charge. You want to be the reason you make money. Okay. So how long has this buying pressure been going on? Is it, let me actually go to, let's go to PDD, right? That's a pretty good example of a stock that's been rallying. Is it one day of buying power? Is it 4 weeks of buying pressure? Is it 2 months of buying pressure? These are the kind of things that we really need to determine as traders. So here's the key. The more dominant the order flow for a longer period of time, that means that somebody spent real money to pay higher prices and hold that bid up. So there's no need to guess. You know, we could buy all the fancy books and all that kind of stuff and choose to make trading as complicated as possible. But the concept of buying stocks or selling stocks really comes down to, if it's hard to find, it's not there. And we actually had it was one of the biggest conversations that we actually had on our coaching call last night, which was getting out of a trading slump. So right here. And generally speaking, when a trader is struggling, 9 times out of 10, again, if you don't know, I own 2 trading firms in New York City. The quickest way to get out of a slump is to make sure whether or not you're actually taking good ideas, lower your position size, and kind of hit singles until you're getting a better feel and you're on the right side of the market. So this is the breakdown of keeping it simple. If it's hard to find, it's not there. And actually, you know what? Something I'd love to see you write down right now, which I think is super important, and I really, really think it will help you. I have no idea how much experience everybody has here, but I can guarantee you this one thing will help you. Okay. You need to know what perfect looks like. And when I mean perfect, and we're breaking this down and we're breaking it down into, let's call it multiple time frames, right? We're looking at 3 months of amazing buying, 3 months of amazing buying. That's what perfect looks like. Then you need to determine, how do I know perfect has ended? And then what do I do? Now, the reason this is so important is, if you don't know what perfect looks like, if you don't know the perfect opportunity for you to determine, yes, I want to be a buyer of these stocks right now, then that means every trade looks the same to you. So if you don't know what perfect looks like, every deal looks the same, which means you don't have an edge. There's no other way to put it. So again, this takes us into yesterday's coaching call, and we start to break down some of the questions about determining share size, right? It's about probability, risk, and reward, then position size. But it all starts with probability. Probability means that you know there's a likelihood of the stock moving in the direction that you want because of A and because of B and because of C. And the more of these pieces to the argument that you can put in there, you step up and you're like, yeah, I can't wait to buy this thing because there's a good chance it's going to move in my favor. If it moves against me, that's the next question that we had last night. Understanding your risk, your position size based on probability, risk, and reward. Once you understand these things and you understand what perfect looks like. So if you have an A+ idea up here, whatever that A+ idea happens to be, right? The further you move away from perfect, the harder it is to find good ideas. The further away you move, that means you have to decrease. The smart trader will decrease the amount they're willing to risk because you're literally decreasing the odds of making money. Now, this is where a lot of traders get into trouble. There's two places, and we'll go back to that chart again right here, where it's perfect, right? Everything looks great. And we're talking about October through December, right? And then we go to the weekly chart. And we're talking about, again, the same time frame. We're looking at October through December. You have 5 or 6 great weeks, and then you have 6 weeks of indecision. Then you have another good week, and then you have indecision, right? So the first challenge for some really smart, hardworking people who might be frustrated right now is knowing what A+ trades look like. So remember, if it's hard to find, it's not there. The better you know an A+ trade, the more conviction you should have in the idea. You still might lose money on an A+ trade because the very definition of an edge means it works most of the time, meaning a large sample size, it should work in your favor. The further away you get from perfect, the lower your risk tolerance should be on those ideas because you're literally walking away further away from the higher probability of it moving in your favor. That's the first part of good trading. The second part of good trading is if you know what perfect looks like, how do you know when perfect changes? So you need to have some form of price action, and probably on the weekly charts and the monthly charts will tell you. If we go back out to the monthly charts, we got a screaming signal over here. After we had perfect for 3 months, you had what we call a bearish U-turn and then another bearish U-turn. So you had 2 months of price action telling you something's changing. Yeah, I'm a Star Wars fan. There's a disturbance in the force. It was perfect. It was perfect. It was perfect. Wait, that's not supposed to happen. So now you need to sit up in your seat and then you need to make a determination. How do I know that a lot of people are good at the first part but not good at the second part? By the amount of people that have come into our boot camp since January because they weren't prepared for the stock market to reverse. So when the stock market was perfect, and we were doing this for a while, and especially when we were doing this here, this was fun, right? Who didn't have fun here? But what's your plan for when we start pushing down and pausing instead of pushing up and pausing? So the second part, understanding when it changes, is just as important as understanding when it's obvious. So I want to work our way over now. So that's the strategy. Okay. You need to spend this weekend, and I'll let you snapshot this so you could take a big snapshot of this because this is the ideas that you could think about over the weekend. So you could write there. These are from last night's coaching call. And you can actually see last night's call was 1 hour and 45 minutes. Let me zoom this out a little bit just so you can put everything into one. There you go. Take a snapshot of that so you can understand some of the things that we talk about. Now, what I want to teach you now is actually a big part of trading as well, which is understanding. Now, I'm sure a lot of people have heard the term hedging. So let's say, for argument's sake, the CPI number at 8:30 comes out and it does not show inflation slowing down. It's showing that it's actually still in place, and that would imply that the market's going to go down. But let's say you have longer term positions that you don't want to get out of, and you just don't want to dump them. You like the stocks, you like them long term, but you want to not lose as much money. So now we're going to come up with a strategy for understanding how to hedge your longer term positions on a 5-day basis. So not long-term positions, just like the market's going down right now. I just want to take advantage of it right now and then I'll look to do the same. So here's what we're going to take a look at. And we're going to use the stocks in the Dow as an example. So imagine you have the stocks you love these long-term ideas. Oh, by the way, if you could do me a favor, if you haven't done it yet, if you could please do me a favor, if I've been providing some value, do me a favor, hit subscribe and the thumbs up button if I've been providing some good value for you today. So what we're going to do is, if the market's going down, but you want to maintain those positions, and I'm going to show you as an example in the Dow Jones industrial stocks. Okay. So you can see we have the stocks in the Dow here, and we're looking at the weekly chart. So all you're going to do is you're going to go into the stocks in the Dow on a weekly basis. Okay. On a weekly basis. And you can see these are the stocks in the Dow over here. And you're going to look at the color of the weekly candlestick. And you can see here, there's quite a bit of red on that screen right now, right? So this is where you separate yourself from, I want to be smart versus I'm more concerned with being money. I don't need to sound brilliant at a barbecue. I'm more concerned with maintaining my sanity and my portfolio, right? Whatever stocks, and we just talked about technology stocks. We just showed you some stocks in the Dow. Stocks that if inflation goes up, we're talking about consumer cyclical stocks will most likely end up going down, because that's the stuff that's the consumer cyclical. Is it's cyclical in that when you have extra money, you go and buy those kind of things that you probably, have discretionary money. That's consumer cyclical, right? So if we head on over to the list of stocks that we showed you before, and we take a look at the research, we're going to work our way down into this list here of consumer cyclical stocks. So you can get an idea of what kind of companies are in here. They are stuff like Nordstrom's, electric companies, right? GameStop, Home Depot. These are the kind of things that you might pull back a little bit on. So this is the first list of stocks that I'd be looking for if inflation goes up, that these stocks would generally be going down, as well as technology stocks. So you also need to have a list of technology stocks. So we'll work our way down and get all the way down to that list. Now, you don't need to look at all of them. You need to look at stocks that match the price range of your resources and how much risk you're willing to take. You might be nervous Nancy, and you might not like a lot of volatility, but you want to protect your portfolio. So maybe nervous Nancy will look at stocks that are $50 or less in those areas, technology or consumer staples. Maybe you're aggressive Annie and you don't mind a little bit more volatility. So maybe you'll trade stocks that are a little more expensive in those two groups. So what you're going to do is make a small list of those stocks, put them into your trading platform. And here's all you need to do. Look at the weekly candlestick. So this is an easy way to hedge from Monday through Friday. Now, a lot of people trade weekly options. We're talking about a weekly hedge if those candlesticks are red. So that means that where it opened and where it's going after it opened, it means it's going down. So build a list of those stocks. And if they're going down, traders who understand short selling or buying puts, whichever way you want to do that, you will be looking for those stocks to go down from Monday through Friday. And the gains that you'll make on the way down will be offsetting the losses on your longer term portfolio. So it's kind of a simple way to protect some of the losses by short-term gains over a 5-day period. Now, if short selling is new to you, I'll post a video at the end of this right now. You'll see it over here or over here. I'm not sure where it's going to be. It's a 7-minute video on understanding short selling. So hope I got you pumped up today. There's a lot going on right now. 8:30, 25 minutes from now. If you're watching the replay later, watch it, take notes on all the stuff we talked about. Remember, the big surprise today is if it shows inflation slowing down, especially after the way the market got crushed yesterday afternoon. If the CPI number shows it slowing down, we are going to have an amazing bullish day to be a day trader. So buckle up. Remember what we said before. Have that coffee ready. Have your water on the side. Bring your breakfast to the desk. Don't leave your seat today if you're day trading. I wish all of you could be in our boot camp. If you want to learn about the boot camp and do this with me in real time, click the link below the video. I'd love to see you. Have a good day of trading today. It's going to be exciting. I'd love to hear from you next Monday when we come back, how you did today. It's going to be really, really exciting. The numbers come out at 8:30 a.m. Eastern. Thank you so much for joining me today, everybody. I hope I gave you some value. Do me a favor, hit that thumbs up if I did. and go get them today. Today's going to be an exciting day to be an active trader. Have an awesome day today, everybody.